Hi guys, Jason here for TheChartGuys. I had one of our esteemed members request that we look at some fuel cell companies and do some technical analysis coverage of these guys because they're on a little bit of a run here over the past month or two. And now I remember PLUG from a crazy run in 2014, I believe. Let's go back. And there it is. That was a wild ride. So if that sort of volatility is coming back into the fuel cell sector, I'm on board. So let's take a look at some of these names. We're going to start with FCEL, and we're going to talk a lot about overbought conditions, hype, and volatility, and what that can mean for you. And what we're going to do is break down our daily technical analysis. We're going to look for key levels, and what we do with this is we speculate on the most likely outcome in a given scenario. So we'll start with the FCEL daily chart. So right away, I see that there's area of resistance around $3 psychological. Psychological levels come into play because it's a really nice number to both put your sell target at, and if you're looking to short, it's a nice area to short. Really, it's just a round number that people recognize, and it's an easy goal to set. So if you're bought in at 224 and you just want to take profit and you need to pick a quick number, $3 is a happy place to do it. People like round numbers, and that's why they come into play as psychological levels. Down here, we see $1, we see $1.50, we see $3. There is a reason for that. And because of that, I'm watching for resistance at 3 psychological. If we can get up there and hang around for a while and then finally break through that wall, then that is great. But right now, we have to assume that there is a lot of pressure at $3 that is going to be an issue for FCEL in the future. With that in mind, bulls are in control right now. We're seeing a very strong daily uptrend, and it's so strong it's at the point where we need to be concerned about bulls running out of gas. So the volume here is good. It's not extraordinary, but it is giving us this nice solid move to the upside. But what we need to watch out for is, do we have overbought conditions? Meaning, have the bulls move so quickly, so fast, that we can expect some pullback, because once those bulls are done buying, and if they've moved the price artificially too high, we're going to have to wait a little bit for that price to come back down to match what the general market agrees with. So for that reason, we check out the RSI levels. RSI is an indicator of being overbought, and we can see that in this case, our RSI is above 70, which means yes, we are overbought. And if we go back historically, and by historically, I just mean the last few months, once we get overbought, we often see a quick drop. So here we can see we were overbought. We were much more overbought. We had a quick run up. We saw a lot of profit taking on the January 21st. When we hit that 3 psychological, we were overbought, and we saw a lot of consolidation to follow. So once we reach overbought conditions, the most likely outcome is a continuation of that behavior where we see consolidation as that price generally comes back down and finds a new home before upside continuation continues. So tomorrow, a likely outcome would be a break toward $3 psychological, a rejection from that level, and then we would look for daily consolidation. Our last daily higher low wasn't until 192. So if you're looking for an entry in FCEL, this may not be the most opportune time for it. If we see a struggle and we come up and hang out against $3 psychological and we're just hammering away at whatever big wall may be there, we can look for an entry on the break of $3. But if we bought before and that wall holds and we face daily consolidation, you could be underwater for a little while. So that's why it's important to time our entries, not at the top of breakouts, but after those breakouts and the strength behind them has been proven. Otherwise, we look for our entries when it looks scariest, when the price comes back down and tries to set a new daily higher low, having consolidated nicely. So that's the quick lesson on FCEL today. On the 4-hour time frame, we are overbought. And if we go back again and look, we can see that these big overbought conditions often result in a drop. Overbought, drop, overbought, drop, overbought, sideways consolidation, which still cools off that RSI, but now we're overbought again, much more than we were before, and we haven't established a daily or a 4-hour higher low for quite a while. So a 4-hour higher low, what we're expecting, and what is healthiest for the market, is when you get a move up and down, and up and down, and allows things to cool off while still being an overall upside direction. Right now, we can see that here, but now we move so far up that we expect some down. And we have not fallen down since $2.05, or $2.81, so that is a substantial spread, and we haven't seen any of that consolidation. That is also why we're overbought at 84 on the RSI. Hourly time frame has given us a little bit of a pause here. But these are 15-minute levels, and they're 15-minute levels because the action is so tight. So we have an overall beautiful 15-minute uptrend that we can use, absolutely grinding this blue line and this red line are EMA 12 and 26. But on the hourly time frame, we just have not seen a lot of strong hourly consolidation. I would say our last big hourly low was either 25.55 or right above it 20 or 20, let me re-speak those numbers. $2.55 and then possibly at 261. So close together, but that is what we need to do. So what we're going to watch for tomorrow is an approach toward $3 psychological. We're going to look for a loss of these hourly higher lows, the absolute lowest value of each of these tickers. So you can see that every time we hit a low, it is higher than before. And this is just in today's action. And going back a little bit, once we stop that process and that trend changes, we're looking at consolidation. So if we lose hourly higher lows and we start to see hourly downtrend, we're going to look for that 4-hour consolidation to form, and we will look for that 4-hour higher low to form somewhere. We don't know where it's going to be, but we're just going to watch trends and watch for trend change. All right, you get the idea? Let's take a look at PLUG. So PLUG is way more aggressive on the daily time frame, and it is not a stranger to being up here. So what we can do is go to the weekly and take a look at what action and what resistances we might have in our future. So the big resistance that jumps out to me right now, 647. We saw a massive day today, which is likely going to result, well, it is going to result in massively overbought conditions. So there's something that we need to keep in mind. When we're in a complete hype market, RSI tends to stop mattering. If we look at SPCE, we can go to the daily time frame, and here's a ticker who has been on a rampage and it's of its own right. RSI has been overbought for a while on the daily time frame, has been overbought for a while on the 4-hour, and has finally started to consolidate on the hourly. If we go look at PLUGE, we are overbought finally for the first time on the daily or the weekly time frame. And on the daily time frame, we have been overbought for a few days. But what we can expect to see, and I should say, we shouldn't be surprised to see upside continuation if the volume and the hype and the interest is there to disregard RSI. But we can never really wait for that. What we have to do is always use our technical analysis to look for scenarios. So if the bulls are going to continue and they're not going to care about RSI, we're going to see a very, very strong trend continuation. And if we go to the hourly time frame here, this is what I'm talking about. Here's our hourly higher lows and higher highs. What we need to do is come down and set an hourly higher low against our EMA 12, which will allow things to cool off, but it's not going to impact the 4-hour time frame or the daily very much. So if we see a gap up tomorrow, we need to maintain hourly higher lows. Once we lose hourly higher lows, we're going to be looking for that 4-hour consolidation. So right now, bulls are in complete control of PLUG. In after hours, we are sitting at 614. So to go to our daily time frame, we're already up here in after hours. So we are slowly marching toward that 647 resistance. So 647 may not even matter tomorrow, but if we open below it and we see some rejection, we lose that hourly trend, keep a close eye on that for consolidation opportunities. And even more so, look for your profit taking. If you're in a position on PLUGE and you start to see some weakness with the anticipation that we can get some sell-off action. So let's go back to what some of these similar breakouts looked like historically. Here's a good one. So somewhat similar, strong uptrend, 2 really big days. Then we see an area of resistance. Is that an actual resistance level? It's not, but we set a high, we saw a double top very close to that, and then we saw the hourly trend change and big consolidation. Let's see if we can find another example on PLUG. Same ticker, same strong run up. We get a big day, we get a nice move, and then we see a loss of trend and consolidation. And that is what we're concerned about. And again, we never want to buy into these things at the very, very tops of these cycles. At a minimum, you want to wait for those consolidation opportunities to come. So let's go back to the hourly. Here's our nice weird hourly trend. And here we're at the top. What we need to do is wait for that fear to set in and then try to get those hourly higher lows. It's all about the lows that allow you to capitalize on the most potential upside swing in your play. If you buy up here and you start to see that hourly consolidation, you have to wait for your price to retake its level and go higher before being profitable. And it can be a little bit scary to hold those positions, especially when you're way up high like you are in PLUG right now. So always be cautious on these names. BLPD, BLDP. Very similar situation to PLUG. Let's go back and look historically, see if we've got any price action in this area. And we've got a little bit, and it looks like a similar spread to our PLUG. We have resistance from way over here in 2003. Well, that's a long time ago. So I would not be convinced that that's going to be an important level until we get there. It's just been far too long, and the market tends to place a lot more emphasis on recent levels than it does on historical levels. So on the daily time frame, nice daily consolidation, a very strong and gradual grind that we see a big green day, another big green day, and we're going to be looking at overbought conditions. 76.41. Last time we had this RSI, we did manage to stay over top of 70 for quite a while, but then it did consolidate. So keep an eye on that. On the 4-hour time frame, we haven't had 4-hour higher lows for a while, so we can be expecting that as well. RSI is at 87.13, and the hourly is taking its opportunities to consolidate, so our hourly should be a little bit healthier, and it is 78.53. So hourly higher lows are being formed. So what we would watch for is a loss of these hourly higher lows. That would be indicative of the first stages of consolidation and possible profit taking opportunities. Resistance right now is at 15.42. Has not been proven. That's just a historical level that we can use to gauge some sort of feeling against. BE, another big breakout name today. Also not breaking into blue sky territory with resistance at 15.30. Our RSI on the daily is 80.14. And likewise on the 4-hour, it has been a very long time since we've consolidated. And I would struggle to call this a 4-hour higher low, but 940 is a base of support. Hopefully our hourly time frame has been giving us some needed rest, but not nearly as much as BLDP has. Our hourly RSI has been overbought for a very long time, sitting at 89.08. Another thing I want to note is that when we have RSI that stays overbought for a very, very long time, I tend to place less emphasis on it as well. It needs to be a quick indicator with a quick response for me. Once we look at situations like this where our RSI has been overbought for so long, it's all about the trends, it's all about the price action, and it's all about recognizing the psychology behind the candlesticks. So right now, I am looking for continuation on BE. I've got no reason to suspect that it's going to pull back immediately. We've been overbought for a while. I do expect it to do some consolidation, but what I'm going to be watching for is the loss of trends. So if we want to go zoom right in, we're going to look at the 15-minute trend, and we're going to wait till we start losing our 15-minute higher lows. Once we lose our 15-minute higher lows, we zoom out, we look for hourly consolidation. So let's make an example here. If we are looking at a 15-minute trend, we set a high, we start to see a trend change, and if we knock out 1364 and we are in a 15-minute downtrend, we zoom out and we start to look at what's next. So, well, our next hourly support is at 1306. Going back to our 15-minute time frame, if we continue that trend and come down and we lose 1306, that means our hourly trend has changed. We're going to look for a lower high, and then we're going to look for downside continuation. If that happens to fall over, then we look to the 4-hour time frame and look for 4-hour higher lows. So that is how we use our time frame analysis and our trends to try and, I don't want to say pinpoint the top, but look for signs of weakness and look for signs of potential reversal. So if you are in BE, congratulations. I hope you find a very profitable exit, and don't be concerned about leaving money on the table. If you like the number that you see on your trade, take it. It is far better to take 80% of the potential. Maybe we will run to 1530. Maybe we will run to 18. I don't know. But I would hate to see anyone in a profitable situation decide to wait and see and hope, go up to 18 and then go right back to 9 and end up right at 0 with nothing to show for it. Technical analysis can help you find entries and can help you indicate or find moments of weakness in the market. And it's those moments of weakness where the scales start to tip. And we know things need to consolidate. We know that we're overbought on a lot of these names, and reality needs to set in eventually. We've seen it happen so many times. Let's go look at BE, see if we can find some historical examples. Here's a really good one from way back in 2018. Big run up. We were just in overbought, and then we consolidate. Let's see if we can find a really nice breakout. Just overbought and consolidate. Okay. Can we find anything? All right, maybe it's a little bit new territory on this hype run for BE. You get the idea. Stay safe, protect your money, be profitable, and if you want to learn technical analysis, send me an email, info@TheChartGuys.com. Add a comment here. I love to help people learn, and check us out. TheChartGuys.com.